what do you think you missed in all of this?
I think that the market is probably reacting to the change in consumer behavior that we've seen in our business as a result of COVID. And what has happened is customers have changed their buying preferences. Vroom used to sell cars in the $28,000 to $30,000 range, and now the demand is actually in the $23,000 to $25,000 range. So Vroom is meeting that demand. And we're encouraged because while the average selling price of the vehicles is lower, our gross profit per unit is actually ascending. And so we had a very strong second quarter. We improved our guidance for third quarter. And I think that the street is probably digesting that movement in average selling price.
How much of it, though, was a guidance issue, and how much of it was a miss on, in terms of, as you were thinking about inventory, how much inventory you wanted? I mean, to some degree, I don't think anybody anticipated exactly what was going to happen here.
Yeah, I think a brief story of second quarter will set the stage. In March, and you've heard the March 18th day, we think about this in early March. We read the tea leaves. We've got a strong data science organization, and we saw that no good would come from sitting on inventory. So we made the conscious decision to lower our inventory. And we sold off that inventory very, very quickly, very agile organization. And in doing so, the demand bounced back in May, and we've spent really since May rebuilding our inventory. And as we rebuild our inventory, that of course drives both consumer demand and consumer conversion. And so, yeah, we have the highbrow problem of actually being unable to serve current demand. So we are sprinting towards growing our inventory and listing that inventory.
So, Paul, it's interesting you say it's an improvement in the third quarter guidance. I mean, it was below what analysts had been expecting. So that's the source of the weakness in the stock. And in terms of the inventory, is it really that you're caught off guard, that you're sort of offsides on inventory? When you said you reduced inventory in the second quarter, that's when there was peak demand. That's when people wanted to buy a car because they wanted to get out of Dodge, and you didn't have the inventory on hand, and now you're rebuilding that inventory. So with all that data science, are you able to better predict how much inventory you actually need to meet this demand, which is interestingly growing during this pandemic?
Yeah, again, that was very early in the cycle when we decided to sell off the inventory. As soon as we got signals that demand was returning in mid-May, that's when we started the ascension on inventory. And by the way, we continued to do that. And again, we guided for continued monthly sequential both sales and earnings growth. So I think the street will digest that and understand that we've got, honestly, the fundamentals are intact and an ascending business.